Welcome to this simple market update. My name is Jason Hamilton, and in this video, we're going to discuss how geopolitical events have historically affected financial markets and the global economy. And this is timely because the conflict between Israel and Hezbollah in Lebanon has escalated in recent days, and many now fear a full-scale war. This is occurring nearly a year after Hamas attacked Israel and is also in the context of other geopolitical conflicts, such as the war in Ukraine, tensions between China and Taiwan, and many more. So without minimizing the real-world impact of these conflicts, investors may wonder how it might impact their financial markets and the economy. So over the next few minutes, we're going to discuss historical events and why it's important for investors to maintain a long-term perspective rather than reacting to headlines. All right, first, this chart highlights several geopolitical events over the past few decades. For long-term investors, geopolitical risk is unavoidable, and headlines on regional and global conflicts can be alarming since they are unlike the typical flow of business and market news. But throughout history, geopolitical events have often led to short-term market volatility. However, their long-term impact on portfolios has typically been limited. When markets did struggle for some time, this was largely due to broader market conditions. For example, the dot-com bust during which 9/11 occurred, or the rapid Fed rate hikes in 2022 that coincided with Russia's invasion of Ukraine. It's also important to remember that the 20th century faced many major geopolitical events such as World War II and the Cold War, yet markets experienced many strong bull markets during that time. Second, when there is an impact on the global economy, this is typically due to oil prices. Oil prices can significantly influence global markets, potentially impacting inflation and economic growth. So far, recent conflicts have caused modest increases in oil prices, with the Brent crude oil rising from $69 to about $75 per barrel. However, this is relatively minor compared to the previous crises, including the jump to $128 per barrel in 2022. The U.S., now the world's largest oil and gas producer, may be more insulated from global events than in the past. This increased energy independence could provide some buffer against oil price fluctuations. Markets may also be slightly less sensitive to monthly fluctuations in oil prices now that the Fed has officially began to cut rates. Finally, despite ongoing geopolitical tensions, the stock market has shown resilience this year. The S&P 500 has experienced only two 5% or worse pullbacks, while delivering a 20.8% year-to-date total return. This is quite exceptional, especially given the many concerns investors have had throughout the year. This performance underscores the importance of maintaining a long-term perspective and not overreacting to headlines. While geopolitical events can increase market uncertainty, broader economic trends remain the primary drivers of market performance. We've only just scratched the surface on this important topic, but if you'd like to discuss further in more detail, please don't hesitate to reach out. You can always find us at keepitsimplefinancial.com.